You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mish Shedlock, editor of Mish's Global Economic Trend Analysis. Welcome to the show, Mish.
It's a pleasure to be back on, Jim.
Taking a look at your website, factory orders unexpectedly declined for the 6th month, and there's 5 excuses. Maybe tell us what those excuses are and why factory
no one
orders
ever
are down.
Expects a decline, do they? I mean, they don't even account for things that they ought to be able to say, like they're blaming it on ports. Actually, this is one of the few times they didn't blame it on the weather, but they blamed it on the ports, they blamed it on the strong U.S. dollar, they blamed it on a couple of different things related to oil. So, and no one said, you know what, maybe this is the slowing global economy here. And that's why, at least part of the reason why U.S. Factory orders are down. Now, interestingly enough, transportation orders were up, and in fact, durable goods rose 2.8% due to a jump in aircraft orders. In spite of that, manufacturing was down, excluding transportation was down 1.8%, excluding defense down 0.2%. And the year-over-year numbers, we're actually seeing a decline now in year-over-year numbers. The last 2 times we saw declines in durable goods year-over-year, a recession was on the way. So, which is it? Everyone seems to think it's rosy, though, Jim. I'm the only one that brought up the possibility of a slowing economy.
And of course, too, I've heard that when the price of oil takes a dramatic drop, a recession usually follows about 6 months later. Yeah,
they're trying to spin that as good news and bad news both. That's an interesting one, Jim. They're saying, well, this decline in oil is going to put money in everyone's pocket. But simultaneously, they're saying, oh my God, the decline in oil, that means prices are falling. Look at this. Prices are falling. Well, we need to increase the money supply to defeat deflation. Well, so it's both good and bad. One of them lets them inflate the money supply, and the other one says, well, it's good because consumers are going to spend. So, which is it? It's kind of contradictory there, don't you think? But, that's the way they play these games. Essentially, what it boils down to is central banks will use any excuse they want to do whatever it is they want. The excuses can be meaningless or contradictory. It doesn't matter. Right now, they want to keep printing money, so they say it's good for this and bad for that, which lets them keep printing.
Of course, too, jobs in the oil patch pay very good money. I think 100,000 layoffs have occurred. And they said, oh, yes, but if retail picks up, that'll make up the difference. Well, retail is the poorest paying job out there. Mm-hmm. In fact, the Canadian Bank just came out with a study today that said job quality is the lowest it's been in 25 years due to the growth in minimum wage jobs.
Oh, I don't doubt that. But what are these people worth? Here in the U.S., we've got this massive debate over, whether or not we should be paying McDonald's workers $15 an hour to do what? To stand there and barely get your order right and not know anything. Some of them aren't even pleasant. I don't know, maybe they should pay $15 an hour to people who can smile. But it makes no sense. How does the government know what the minimum wage should be anyway? Interestingly, Walmart recently raised the minimum wage. And why did they do that? They did it because they couldn't attract quality enough people to do the jobs that they wanted them to do, either stocking shelves or being greeters, whatever. It didn't matter. Turnover at Walmart reached such proportions that they said, you know what, we better raise the minimum wage. Now, that's actually a market force doing it. Instead we've got government bureaucrats believe they know where the rate should be. Well, the free market will set a decent wage on its own. Will set a wage. It won't be the one people want on its own accord if you just get out of the way. Instead, some people think that it should be $15 an hour. I wonder how many stores are going to close if they actually did that. Anyway.
Yes, we digress. What is the solution for this? I think, too, one of the reasons why we might see a decline in factory orders and so on, China has downgraded their economic forecast for this year. They now expect their gross national product to increase by only 7%, which, of course, if that happened in North America, it would be happy times everywhere.
Oh, my gosh, yes. The emerging markets, that's one of the rules of the game, can grow faster than well-established markets, say, like the UK, Canada, the United States, Germany, for example, Japan. But how long can one be an emerging market? It seems like this is going on decades here now. But I don't think China's going to hit 7%. I don't think it's going to come close to that. Actually, I don't think it hit 7.5% last year. If you factor in malinvestment, if you factor in all the shadow banking, if you factor in all the homes that were built where no one lives, if you factor in the airports where no one lives, and you call that malinvestment instead of GDP, you come to a different conclusion. And one thing you really need to factor in is pollution. What about the cleanup costs of all of the smog and dumping of chemicals into rivers? What about the cleanup cost of that? So no one is subtracting these negative things. Instead, what will happen is we will see it. No one's ever going to admit that China really didn't have 7 or 7.5% or whatever. Instead, we will just see it in a slowdown in future growth. All of a sudden, it's going to look like these things are happening, but the numbers won't add up because eventually you have to account for all of these write-offs and write-downs. So I think China is going to trend towards GDP growth of something more like 2%. And that's going to be a real shock. It's already caused a shock, actually, to Australia, and I think the Canadian dollar as well. But Australia seems to have gotten hit a little bit more here with all the metals, all the coal, everything else that conveniently ship from right next door in Australia over to there. Australia is in for a really, really, really rough time here, and to a lesser extent, I think it's going to hit Canada.
Of course, Canada's lucky enough to have the world's biggest real economy right next door, and it is the world's biggest trading partnership. Yep.
It's the biggest trading partnership to the United States. I think Canada's in recession now. I've not looked at any reports recently, but when I saw the yield curve invert, I said, here it is. And then, if I'm not mistaken, GDP reports came out and said, well, it's negative. But of course, everyone believes all these things are temporary. Temporary typically meaning, well, this is a soft patch that's going to go away in a month. I don't think it's going to go away in a month. I don't think it's going to go away in a quarter. Meanwhile, the dollar keeps rising and rising, and without a doubt, that's going to hurt, U.S. exports. So I think we're going to see some shockingly low numbers later this year from the U.S. Be interesting to see if when we get those numbers, the Fed even hikes. Everyone thinks the Fed's going to hike. And meanwhile, the dollar keeps going up and up and up and up in expectation of all of these hikes. And, that's going to reverse if these hikes don't happen. So we'll see. Well, I think we're going to find out within a few months how real or unreal the U.S. economy actually is.
Right, and of course, U.S. tourism operators must be worried because, the U.S. dollar's 20% higher than the Canadian dollar right now, and compared to other currencies, it's even higher than that.
Mm-hmm. The euro hit a 11.5-year low versus the U.S. dollar today. And meanwhile, Draghi is out there acting like as if he's the savior of the euro. The funny thing is, a euro is worth about $1.10 today. In 2011, it was worth $1.20, and that was considered a crisis. They were out. We need to save the euro. We're going to save the euro. So they saved the euro, and it went up to roughly about $1. It was worth about $1.40, and no one was happy with that. So now we've got QE, just as the ECB upped the forecast in Europe. No, they're hell bent on causing this 2% inflation in a deflationary world. Simply put, they're nuts. They're creating all of these asset bubbles, and when these asset bubbles burst, they're actually going to see the real deflation they ought to be fearing, which is asset deflation, on which all these loans have been made, and which a lot of these loans are going to go bad. So they're causing, by blowing these bubbles, the very kind of destructive economic forces that they think they're fighting when they're fighting lower consumer prices, which are actually to the benefit of everyone. So how can lower gas prices be good when consumers can take money they don't spend on gas and spend it on something else instead? Well, why isn't lower price of computers good when people can take the money they don't spend on computers and spend it on gas? I mean, what they say makes absolutely no sense, but they repeat it often enough that people actually believe these things.
Well, again, 100,000 job losses in the oil patch, very high-paying jobs. How does getting a job at Walmart replace that?
Well, it doesn't. And so one always wonders, are these people lying through their teeth, or are they dumb as a rock? And I always sit back and reflect on this, and typically my answer is they're just dumb as a rock. Not that they're incapable of lying, but the most likely solution is these people just simply don't know what they're doing.
Or are they self-deluded?
Well, that too, yes. Absolutely.
Maybe a water cooler full of LSD or something.
Well, yeah.
I mean, you wonder. I mean, none of these economic predictions done by the Fed or central governments have panned out over the last 7 years.
No, or IMF or any of these agencies. So, they believe they can fine steer the economy like a truck, which actually makes as much sense as actually it makes less sense than if they were to announce that all of a sudden they're going to set the price of orange juice. The Fed doesn't know what the price of orange juice is or should be. It's certainly, and something much harder philosophically is where to put the price of money and how much of it there should be. Somehow we take it that central planning for the dollar and interest rates make sense, while also accepting that the Soviet-style central planning of how much steel should be produced doesn't work. So again, we hold all of these contradictions in our head. And I think I'm just going to maybe write a post about contradictions here, because it seems to be the theme of what I'm saying here today.
We'll have more with Mish Shedlock right after this.
More and more people are looking to the Internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to Mish Shedlock, editor of Mish's Global Economic Trend Analysis. Mish, what is the next big trend you think is going to happen now that we have all these central bankers telling us, don't worry, nothing can go wrong, which reminds me of that old joke about you're on the first robot airplane, and they announce this is a robot airplane. Nothing can go wrong. Go wrong. Go wrong.
Well, I don't know what the next big thing to go wrong is, but there's certainly a number of big things that are going to go wrong. I think we're going to have a pension blow up here in the United States. I think a number of cities in Illinois, in particular, are bankrupt. I think we will see some bankruptcy announcements here in the state of Illinois if the Illinois government approves passing bankruptcy, which is kind of an interesting thing. If states have to grant cities or municipalities or whoever the right to declare bankruptcy. Once they do that, though, the rules governing bankruptcy no longer happen at the state; they happen at the federal level. That's why we saw, all of these pension arguments in California and Detroit, where the states would pass these laws that would say, well, all of these benefits to unions have to be paid; they're sacrosanct. Yet when we get into federal court, they say, sorry, federal court trumps state bankruptcy law. It does. However, states can choose to not grant cities the option to declare bankruptcy, which keeps them in limbo forever. That is the state of affairs right now here in Illinois. So a pension crisis is one thing. A currency crisis is certainly in the cards at some point. I don't know if it's the next thing up or not, but the yen, it wouldn't surprise me if Japan actually went into hyperinflation at some point over what they're doing. In spite of what Mario Draghi says, the crisis in Europe is not solved at all. And in fact, when he came out and made that statement today, that the Eurozone crisis is over, I think that's just a prelude to another aspect of how stupid these guys are, that a crisis is probably going to strike. I believe this one is sometime between now and June, more likely in a June time frame, because that's how long they granted Greece an extension. So those are the kinds of things. No one is prepared for a recession in the United States. No one's prepared for the asset bubble in Canada housing to burst. No one's prepared for equity bursts globally. So all of those things are things that I expect to happen, and I guess it would be fitting if every one of them happened at once, Jim.
Well, of course, it's, because it is a domino effect, and it isn't communism spreading through Asia. It's the free markets collapsing.
Yes, yeah. Well, no, it's the manipulated market collapsing, not the free market collapsing, so.
I'm sorry, I thought they call it a free market.
Yeah, well, they will blame it, no doubt, that this is, they will blame it on the free market. They will blame it on lack of regulation. Meanwhile, there's regulations on literally everything. So, but it certainly won't be the free market that caused this. It will be the lack of it that caused this.
And of course, we have the HSBC banking scandal, where a whistleblower at HSBC proved that they were transferring money, millions and millions of dollars at a time, without telling governments about these massive transfers. Mm-hmm. The BBC did a documentary on it just the other day on their Panorama show, where they tracked this guy. He said, I want $5 million in cash in a suitcase ready for me when I show up at the bank. Mm-hmm. And it wasn't on anybody's books. And what's more, 1,100 people were named in the UK as doing that. Only one person has been charged. So how complicit is the government in this?
1,101 prosecuted. Well, obviously they.
You try to get away with doing that.
Mm-hmm, mm-hmm. Well, absolutely. I couldn't get away with anything. It wouldn't surprise me if this phone call right now is being monitored. In fact, I know it's being, saved somewhere. Whether or not anyone's listening to it at the moment, I can't say.
I love my country.
I love my country. Well,
I don't know. Does that help me?
No, I don't think that helps you. But Canada's probably listening too.
Oh yes, they certainly are, and They're passing a bill that will allow the government security agencies to throw you in jail for 7 days without telling anybody, and they have the right to suspend the constitutional rights that you have.
Yeah. Mm-hmm.
Yeah, so I love my country.
They have the constitutional right to suspend your constitutional rights. Is that what it boils down to?
Yes, it does.
I think that's another contradiction here, isn't it? Which is the theme of the day, right?
Well, undercover police aren't supposed to break the law, but now they can.
Yes. Mm-hmm.
So
anyway, Jim,
I don't feel any safer for it.
No, I don't feel safer. I certainly don't think they feel safer in Ferguson, or St. Louis, or New York, or Chicago, for that matter. All of these things are it's just another part of the next crisis where government takes more and more and more and more control over everything.
And I think of our grandfathers who died on the beaches in Normandy to try to prevent something like this from happening.
Mm-hmm. And now it's happening right in front of our nose, and too few people are upset about it.
And of course, every time you raise questions about it, they always ask, aren't you a patriot? Don't you love your country?
Mm-hmm. That's what it boils down to, Jim.
Well, everybody in Germany said they loved their country.
Mm-hmm.
Yeah. And Adolf Schnickelgruber, that was his real name, not Hitler. He changed it when he was 12. Mr. Schnickelgruber learned that you can convince people you can take away their rights because you just manufacture terrorist incidents, and people want to be secure. And Benjamin Franklin said, if you give up your rights to be secure, you don't deserve them. Mm-hmm. And what wise men we had back then.
Well, where are they now? Very few to be found. Certainly, I'm hoping for Rand Paul as the best choice here in the United States in the next election. We'll see.
Well, at least he's an educated man who has educated opinions, which you usually lack, in so many of these politicians. Mm-hmm. Now, of course, the people running the central banks are educated people too, so that's no guarantee of success.
Well, certainly not. What Bernanke and Yellen have in smarts, and undoubtedly Bernanke a PhD. If we took an IQ test or something, I'm certain he would beat me, most people. Yet the guy absolutely lacks any common sense whatsoever. Has no sense of history. Blames the wrong thing. But that's what you get from academia in the United States, probably anywhere in general, which is another cause for, what ails us. Anyway, with that, Jim, I believe I got to run here, and it's been a pleasure talking to you.
Well, it's always a great time. My guest is Mish Shedlock, editor of Mish's Global Economic Trend Analysis. You're listening to HowStreet.com radio. It's a copyrighted performance, by the way. Find us on Twitter at Talk Digital Net. Our YouTube channel, which is proving to be very popular, is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.